Where's the thing? Allowances. This thing. All right, so yeah.
Okay.
Okay.
Oh, good, I
Right.
can hear. Excellent.
Oh, good. I can hear them.
I'll be upstairs if you need help.
Good morning, Peter.
Good morning.
I'm going to go try to help Helena with her video. Okay.
See you later.
Yeah.
And oh, is that you?
Oh,
Is
now
that
I
you?
can hear you.
Oh, is that Peter? See, I don't have him.
Can you hear me?
I don't have a what? Hello. Okay.
Good morning.
Good morning, Peter. How are you?
Oh, fine. And you?
I'm okay. Hanging here. Yeah. Busy here, but hey, it's a good busy. So we miss you guys in the person.
It's
Yeah.
very hard. I find it very hard.
Yeah.
I used to work with SCORE, and we'd interview people who needed help running businesses.
Mhm.
And I quit when they put it all on computer because you didn't see them.
Yeah.
And seeing somebody is very important in some things.
Well, I think it's our generation, your generation, it's that thing. I think the younger generation, they prefer more on the computer. So it's like preference, you know what I mean? Younger one seems like my kids, everything has to be on the computer. They love it. And they so fast and doing all this stuff, you know, and I like interpersonal, and it's, you know, it's just, it's for me, it's much better. The feelings there, you know, I mean, you don't get that over there. Well, we're still missing you jokes, you know, so I know. I guess we early, no, not that early, 5 minutes. So hopefully it won't be long. We have the auditors, so we'll see how long that will take.
Oh, God. Huh?
Mm.
I have a doctor's appointment at noon.
Oh, I think they should be done by noon. Otherwise we're in trouble. I think they have stuff, so I guys email you all the information. I don't know if you guys read the before, so you have time to look it over if you have questions and to auditors. So
Good morning, everybody. We will call the meeting to order at 9:32. We have a quorum. We have committee members, Peter Bieri, Charlie Norris, Joan Gay, Susan Tyler. We have staff of Helena Famiglietti. I'm sorry, Helena. I do know how to pronounce it. Joe Comerford and Lisa Gibson. And we have a guest, our auditor. I'm sorry, what is your first name?
It's Tom Partalis and from Seward and Monday.
Okay, thank you, Tom, and we really appreciate your being here. I will move right away then to that first item on the agenda, which is our audit. So Tom, it's the floor is yours.
Okay, I'm gonna attempt to share my screen so I can pull up the statements. Okay. All right, does everyone see the statement up on the screen? The financial
Yes.
statement? Okay.
That's good.
So, okay, good. So let's run through the statements. Move this a little bit. Okay. So we'll start off by obviously the most important part of the statements is our auditor's report. And if you go to page 2, we have the opinion there. So basically this year, you can see it says that the financial statements are fairly presented, so a clean opinion on the audit. On page 3, we also have the opinion on the federal and state single audit schedules. And same there, clean opinion. So everything's fairly stated. Flip over to page 4. We start getting into the basic financial statements. It starts off with a management discussion and analysis. So this is basically a schedule that's prepared by management, and it's required by GASB, and it just gives a basic overview of the financial statements and the district's activities during the year. It also provides various financial info and financial tables that are derived from the financial statements themselves. So we'll get right into the financial statements and go over the numbers.
We go back to page 4 for a second, 5 rather, for a second.
Yep.
Page 5 under major initiatives. This is not being,
Oh, this is the management discussion. Okay, yep.
okay. The second from the bottom says receipt of 4th heavy duty buses. I suspect that's a typo. It should be 4 heavy transit duty buses.
I think you received 3 in 2019 and then the 4th this year. So I think that's what the receipt of 4,
Yes,
it should say
correct.
the 4th, yeah,
It should be.
Oh, then it should say the 4th.
correct, yeah. It should be, yeah.
So it's a single receipt of a single bus.
Correct. We
Okay,
received 3 in last year, prior year, and that year, the other year, we received the 4th one, Helix, which is heavy duty bus.
Yeah. So it's just a minor typo in the
Yeah.
FD&A.
okay. Thank you.
You got it.
Good point. Good point, Charles.
That was tough one, Peter.
I'm gonna have to match.
I'm
it
gonna have to change my opinion now on this on this. Okay, so let's get right into the basic financial statements. So we start off with the statement of net position, which is basically your balance sheet, and then your statement of revenue, expenses, and changes in net position, which is basically your income statement. So what I'm going to do is I inserted into this document the couple of schedules that I provided to the finance committee in advance. And it's basically the same financial statements, but I also show comparative data so we could kind of do a little more of a detailed discussion on the financial statement amounts.
Can I take you back to page 9?
Okay.
Under the second paragraph of liabilities and net position.
Yep.
Can you
Yes.
tell me what is an unrestricted liability? I don't understand what that means.
What the unrestricted net assets or unrestricted?
Oh, under liabilities, I understand assets. I don't understand what an unrestricted liability is.
You mean this unearned state grant revenue?
No, the next line.
No, the next line. Where it says unrestricted.
Yeah, this is your net asset. We'll go into detail on that when we get to the once I get through my presentation on the statement. So this is your net assets is basically your equity. So your equity is broken out into unrestricted and then your net investment in capital assets. But once we get through the statements, I explain those in a little more detail. So
Okay,
let me just get through the couple of basic financial statements, and then if you have a lot more detailed questions, we can run through them. So like I said, this is your balance sheet, basically your statement of net position. So what I did is I also included last year's financial statement data so we could do a comparative analysis. So let's get right to it. So obviously right at the top, you have your cash and cash equivalents.
what page are you on?
This is that separate document that I emailed to Helena. Did everyone get that one?
Yes, I emailed to everybody that would separate one of the attachments.
Charlie, this is on the screen.
Yeah, so you can see it on my
Yeah,
screen, I'm
I see
sure.
it.
Okay. So you have your cash and cash equivalents. The balance has stayed consistent year over year. We'll see a little more detail of the ins and outs once we look at the cash flow statement. Down below that, you have your accounts receivable, state of Connecticut and federal government. You can see that this increased by about 100, almost 130,000. So basically the increase was due to about 104,000 in CARES Act federal funding, which was not drawn down until after year end. Also due to about 63,000 in funding received from the Connecticut Department of Transportation related to the Extra Mile program for 2020 and 19. So this wasn't received until after year end. So this is what kind of built up the receivable balance a little higher than normal. It's also partially offset by a decrease of approximately 60,000 in all your other normal programs year over year. So the big driver there, like I said, was the CARES Act funding money that wasn't drawn down until after year end, and then the Extra Mile program funding. Down below that, you have your capital assets. This increased by about 350,000. As mentioned earlier, basically there was about 800,000 in purchases. It's, the big driver were the fourth bus purchased, and then there were 3 vans purchased too during the year. That was about 700,000 of the increase. But then this is also partially offset by your depreciation expense during the year of about 455,000.
Okay.
Down below, you have your liabilities. Overall, these were pretty consistent compared to last year. One thing you'll notice is that there's no line of credit balance in there. So the line of credit wasn't used at all this year. So there was no balance and no interest expense paid. And down below, we have your net position, which is basically your net assets or your equity section. It's broken out into 2 categories. You have your net investment in capital assets. So this is basically a factor of your capital purchases and then your depreciation. So this number, 2.8 million, agrees to the net number up above in the asset section, 2.8 million. So it's almost, you have to just kind of think about it as 2 separate net asset categories. More importantly, though, you have your unrestricted net assets. This is basically almost your operations. You could see that this year it increased by about 166,000. So you had a net increase in net assets, so basically a net profit. So this is a strong result for the current year, and it continues a positive trend of increasing your net assets year over year. I went back and actually looked all the way back to 2015, and each year you had an increase in net assets, which is very positive. On average, the increase was over that 6-year period, counting this year, was about $76,000. So it's good that you're building up basically your rainy day fund, to have a strong equity position to basically counteract, future cost increases or, budget cuts, that you're kind of building it up a little bit to help defray any of that if that was to ever happen. And basically this shows that the district is properly, managing its budgets and spending within, its budget guidelines. So basically now, when we get to the next schedule, which is basically your income statement, we'll see how this increase is made up.
Tom, before you leave that page, I'm not asking you to reveal the specifics of other districts, but do you have a sense of how we are doing relative to other transit districts in this regard?
Yeah, you guys are doing, comparative to your size, you guys are doing very well. It varies from each district. I think this year a lot of them, they're pretty similar. That obviously, when we get to the next schedule, you'll see, obviously the passenger fares are all down because of COVID. So expenses are all up because, partially due to COVID and other reasons. But, I think the district, you guys have done a good job of managing that, using your CARES Act funding to help defray some of that. So I think you guys compare pretty favorably.
Okay, thanks.
So next we have basically your income statement. And I did the same thing. I took last year's numbers there so we can see a little bit of a comparative analysis. So you see right up above, obviously your operating revenues decreased by, close to 25%. And this was basically due to, the statewide suspension of fares the last quarter of the year. And that decrease was consistent on all districts that I've looked at this year. We get into your expenses, your wages and fringe benefits increased by about 142,000. This was due to current year raises for the drivers, a full year of the extra mile program, some increased OT during the pandemic to cover drivers that were unable to work, and also due to extra vehicle cleaning during the pandemic. This was partially offset by about 20,000 in the finance manager's wages, which were reimbursed by Middletown Transit District. Down below.
Tom, before you leave that,
Yeah.
I'm still stuck on unrestricted liabilities. I see it in the number that you're accounting for on your last sheet here, but I still don't understand what is it that accounts for $694,000. What is an unrestricted liability?
It's not a liability. It's basically it's a net asset. It's basically your equity list. Think of it as your retained earnings if you're a for-profit company. So it's the net profit that you've accumulated over the years. And it's basically a rainy day fund.
Charlie, I think and I was initially asking the same question of myself. You initially asked that question because this unrestricted net position is listed above under a broader heading that says liabilities and net position. This is the place in the audit, if I'm not mistaken, where Tom breaks out the liabilities, which is the section above, from the net position.
Correct.
It's easy to be confused, but it's not a
I
liability.
mean, even on the MD&A, if you want, maybe next year we could just add a heading to it too, to break it out, just like we did.
Exactly.
Yeah.
Yeah. Because they're lumped together in that
Correct.
summary sheet.
Yep.
And it makes it look like it's a liability, but it's not. It's an asset.
Yep.
Resulting in a net position. But anyway, so Charlie, is that okay for you now?
Well, I must admit, I don't quite understand it, but I accept it. I'm not an accountant, but I've got how it fits in here, but I still not sure I understand what constitutes that. But let's move on. I've got enough answer to satisfy my curiosity.
Well, another way to look at it, correct me, Tom, if I'm wrong, or Helena, is that this is our general fund balance, more or less.
Correct. Yeah. It's basically think of it as your retained earnings. If you're a for-profit company, it's what you've built up over the years of profits.
It's our rainy day fund.
Correct.
It's money in the bank that we always add to every year. Okay.
Okay. So we'll just continue on with the income statement. Basically, we went over wages. You see that the vehicle maintenance and supplies decreased by about 81,000. This was due to to replacing basically almost all the vehicles within the last couple of years. So, obviously less maintenance and repairs are required. Down below that, you have your depreciation. This is a non-cash item. This increased by about $200,000. This was due because there was a large amount of capital purchases the last 2 years. Basically, like I said, replacing your entire fleet. So that's expected that depreciation expense is going to increase going forward. Your fuel decreased by about 20,000, and this was basically due to a drop in the fuel prices during the year.
You know, Tom, I would have expected that number to be lower because we also ran fewer routes during the year.
Yeah, I think if you look at, I think you're, I was gonna expect that too, but I think your miles weren't that far off if you go back up to the MD.
Okay,
Yes.
Oh, remember, we had extra mile
Yep. And extra,
okay,
that
Sorry.
added to all year, and then we only had a couple months of the pandemic in this year.
right.
good point. Thank you. Okay.
And then we have your other expense line item. That increased due to, a lot of the driver there was due to COVID, extra cleaning supplies, extra personal protective equipment. A slight increase in software costs are included in there. There's also some costs related to insured or reimbursed vehicle repairs that's offset down in other income. So overall, your operating expenses increased by a little over 320,000. But what I like to do is kind of back out depreciation out of that figure. So if you see over on the side here, you have your operating expenses less depreciation. So you get a better idea of your true, basically, say your cash outlay, even though it's technically not on a cash basis, but it gives you a better understanding. You had an increase of about 121,000, about 6.5%, which I think is pretty reasonable considering, the current year raises, the current year increase in costs related to COVID and, the extra mile program, basically a full year of operation of that. So down below, basically how that, how is that funded? So you have your federal, state, and local assistance grants used for operations. That increased, consistent with what I said earlier. Basically, you received CARES Act funding to help mitigate some of the costs related to COVID. You received funding for the extra mile program. Also, you had some, normal operating budget increases during the year. So that makes up the increase of about $192,000. In your other income, that's up about 40,000. Like I said earlier, in there is about 25,000 in revenue related to pass-through vehicle repairs. Also included in there is the trolley service income, which I believe was operating for a full year, until COVID hit. So there, the funding of that program is in there as well. So overall, if you look at your decrease in net position right here before capital grants, it's a negative 288,000. But if you back out your depreciation expense, it gets you to your positive increase in unrestricted net assets of 166,438. There's a schedule in the footnotes when we get to that part that you can kind of see that breakout a little more clearly. But I just want to mention it here, and that, sometimes the way the statement looks, we have to include depreciation as an operating expense up above, but it's really not part of your unrestricted balance. Down below, you have your federal, state, and local grants used for capital purchases. This decreased, obviously there was much lower capital purchases in the current year. So that kind of breaks out your, kind of goes into detail on your two main financial statements. The next one is your statement of cash flows. So basically, GASB requires government agencies to report this on the direct method. So this basically shows your cash activity broken out by, your operating or financing activities. So right up above, you have your net cash flows used in operating activities, which was about 1.8 million. And how's that funded? Down below that, you have your non-capital financing activities, which relates to, your federal, state, and local assistance grants. And then down below, you have your net decrease in cash during the year, about 24,000. And then we're also required to show the breakout of your operating activities using the indirect method. And this 1.8 million agrees to the 1.8 million up above. Next, we get into your notes. the first part basically just goes over your accounting policies. There was no changes or no new policies during the current year, so we don't have to spend too much time on that. One item I just want to mention though is that in your accounts receivable, there are some balances in there that relate to the state of Connecticut Department of Transportation that are greater than 1 year old. So we just wanted to disclose that. Someone had a question?
I think that was background noise, but can you go back to that? Okay, there, yeah. Is that related to the extra mile money that DOT?
No, that's part of that. About like I'd say about 20,000 of that relates to some capital money that I think they're just, sometimes the state just takes longer to pay on some of that stuff, and there's, administrative, they need more paperwork, so on and so forth. The other part of that relates to older operating.
All the receivables.
Yeah, older operating receivables that the state takes a long time in kind of reconciling the financial statements and the SPI, the special reports that we provide them that kind of break out all your programs and then the funding.
Sure.
This is common in all districts. They're just way behind in doing this.
Yep, 10 years or so.
Yeah, yeah. So it's just something that, since the accounts receivable is technically a current asset, we just wanted to kind of disclose part of that relates to some older stuff that we still deem collectible, but it's just the state is the state.
Got it.
If we go to page 16, now we start getting into some of the detailed note disclosures. First one is your cash and cash equivalents, just basically kind of goes over your credit risk policy. Basically your balances at the end of the year were all covered by FDIC insurance. Note 4, you have your detail of your capital assets and your changes in net position. So you could see here that the capital assets are broken out by, by their type. You can see the transit vehicles increased by about 700,000. This was due to the purchase of one additional bus and 3 vans. You also had equipment upgrades of a little over 100,000, mostly on the software and hardware side of, some IT equipment purchases. Then you have your depreciation expense, about 455,000 disclosed right there. So like I said earlier, the net balance here in your capital assets agrees to your net asset balance and your net investment in capital assets. So they just offset each other. So this schedule here breaks out your net position, like I said earlier, and your unrestricted. When we were going over the income statement, I said if you take your decrease in net position and you back out your depreciation, you get your true unrestricted profit, which was 166,000.
Tom, what is the GASB or other recommendation about how many months worth of operating expenses an entity should have on hand?
I mean, I don't think they have a recommendation. I think that you guys are well positioned just from the last, I think it's probably been like 10 years of just building up your unrestricted position.
Right.
So I think you're well positioned for, future, like I said, future, maybe say budget deficits or cost increases. You've kind of built up your net asset balance to a pretty reasonable number.
We're probably close to 25% of our net asset balance, equaling 25% of our ongoing expenses.
Right.
Which is it's on the one hand very good. On the other hand, it could be cause for our local members to say, why do you need to keep increasing our local contributions? That's just an aside. I don't expect you to.
Yeah.
Respond to that.
Susan, on the same subject, of course, I repeat this all the time. We have a real nice pile of cash here, and I'm just worried about the state of Connecticut finding it very attractive and feel that they should be able to take, and I think they can take it for other purposes. Is there any indication of how the state of Connecticut feels about our surplus and whether they feel it's too high for us?
I've never had that conversation, Peter. And Joe, do you have any sense of that?
So they tell us that they support us having it. They've been through a number of situations where districts did not have one and failed. So I don't think they have any desire to disincentivize people, having fund balances because it makes them stronger. Their concern right now is districts failing because that's what they've been dealing with over the past several years, not.
It's probably worth noting, Peter, that in the current MO, the memorandum of agreement on the merger between the two districts, that there is a provision in there that specifically states that any net assets of either district remain with the districts. And they have not objected to that provision.
Susan,
Well, I
how
certainly appreciate that. That actually is the most reassurance I've heard in about 3 years. So I'll keep my mouth shut next year.
The other thing I'll say too is that we set a goal of 3 months operating expenses as our target for our unrestricted net assets, which we are now have exceeded.
Right.
Susan, as we approach the merger, I don't know how much Middlesex has, but the total package is going to require more than where we are at now. So
Yep.
I think it may look high right now, but once we're together, you're going to have a bigger package, and you should have a larger unrestricted, when you get to that point.
Correct.
You are correct.
We'll be doubling the size of the operating budget.
Yeah.
Do we know
Us-
what Middlesex has to contribute in that regard?
Tom, have we gotten that far yet?
No, audit's still
Okay.
kind of in process there.
We know what they had last year.
Yeah,
It was about 200 something, right?
off the top of my head, I cannot remember.
It's like 200. So I know we'll add to it this year. So probably combined, we'll be close to $1 million. And just doing the numbers really quick, we should, if we had that same 3-month goal, want to be around 1.1, 1.2.
What's important, I think, Charlie and Peter and Joan, is to know that Middletown has significantly improved its financial situation from when it imploded a 3 years ago. And while they do not have proportionately the same percentage of net asset that we do, net position, it is healthier and growing over time. So it's all going in the right direction anyway.
Yeah, I agree with that. Definitely, from the past couple audits, it's improved, past 2 or 3 audits, it's improved a lot from what it was, before, First Transit and the new management came in and kind of took over.
Right.
Good question and good answer. Thank you.
All right, so let's continue on here. We're towards the end of the notes. The next note, your line of credit, just gives you the detail of your line. Like I said earlier, there were no borrowings outstanding under the line at June 30th, no interest expense for 2020. Note 7 just gives you a little more detail on your unearned revenue. This basically relates to your state matching grant program. You're allowed to carry over some of the funding into the next year. Small part of it also relates to some cash received for passes related to the taxi voucher program, which the service has not been provided yet. Note 8 is your retirement plan. just kind of gives you some detail on your plan, and we have to disclose how much you contributed to the plan during the year, and it was a little over 37,000. Note 9 gives you the detail of your operating lease for your facility there. You could see there in September 2019, the lease was renewed for an additional 5-year term at the same current rate. And then we disclose what your rent expense was for the year. And then on the next page, we're required to disclose what your future minimum lease payments are in accordance with your lease. Some of the notes on the next page, you'll see that note 11, risk and uncertainties. This is something that we've had to disclose now on all financial statements due to COVID. And it just basically, just informs the reader that there's an economic uncertainty, due to COVID. We're not sure what the future financial impacts may be or how long they may last. In your case, you received federal CARES Act funding to help assist and mitigate some of the costs and issues related to COVID. And note 12, we just wanted to put in there a subsequent event note that basically just says that you guys are, in current negotiations with, Middletown Transit and DOT, as far as develop an agreement to combine the two agencies. So that wraps up your basic financial statements. And then next we get into some of your government reporting. So the first part is basically a combined federal and state government report on your internal control over the financial statements. There was nothing negative to report. There was no deficiencies noted, and a clean opinion there. You can see in both the highlighted text there. Next, we get into your federal single audit. Just wanted to mention, so this is your schedule of expenditures of federal awards. One requirement from the CARES Act funding was that they want those amounts broken out separately with a little subheading called COVID to kind of break it out from your normal federal funding.
Tom, there's a note in here on page 23 that says that estuary did not use the 10% federal overhead rate for recovery.
Correct.
I think on administration. Is that significant? Or do we use a higher rate or lower rate? Or
no, you're directly funded, so you don't, that rate doesn't really apply to you.
Okay.
But it's just something general that we have to disclose in there.
Okay, thank you. I should know that.
And then the next report basically just now gives you a summary of your federal audit results, and we have to disclose what the opinion was on the financial statements, obviously unmodified, no major no findings issued. And then page 25 again, we just disclosed there were no financial statement findings, no findings, no federal award findings or question costs to report. The next letter is basically another opinion. This is on your major programs under federal single audit. There were no compliance findings noted, and again, no internal control findings over compliance noted. And you'll see here in the statements that we say that you complied in all material respects with your major program compliance requirements. And then same thing down here, that we didn't find any significant deficiencies in your internal control over compliance.
That paragraph, I read it, I don't know how many times, and it's so sort of intertwined that I can't make head or tails of between deficiencies, significant deficiencies, material weaknesses. It
Right. It's just basically just kind of
together.
Right. It's just basically different levels of, I'd say, issues. At the end of the day, you didn't we didn't find any sort of, major deficiency or material weakness in the work that we're required to do.
Okay, I'm glad that you didn't, but trying to sort out that paragraph is
Yeah.
very confusing.
Yeah, unfortunately, that's just the standard GASB, letter and paragraph we have to use.
Okay, thank you.
Yep. The next part, you get into your the state single audit. You have your schedule of expenditures of state financial assistance, and you break out of all your programs. One thing I just wanted to point out is that this 18,000. So this was I like to show if you receive funding from a prior year, sometimes the state is late in issuing budgets and funding. I like to
Was that extra mile?
Yeah, that's extra mile. So I just like to show it separately, and we kind of do that on all other transits too. So I also just, there's a little paragraph here, C note 3. So when we get into your notes to that, we describe, what this relates to. So the reader knows that it's not a current year funding item. And so similar to the federal report, this is the state's version, which is pretty much the same wording of our opinion on the state major programs related to compliance. Similar to the federal side, there were no compliance issues noted, and there were no deficiencies in internal control over compliance noted. And then just like on the federal side, on the state side, we have to summarize our results, and similar to the federal side, there were no issues or no deficiencies or weaknesses noted. And that pretty much wraps up your statements. I did also provide a draft letter that goes to the board, and it just basically is a general letter, and it just kind of summarizes what our responsibilities were in regards to the audit, and any significant findings or any disagreements or difficulties encountered in performing the audit. And there were none of that. I haven't, nothing negative to report. There was no management letter or anything like that issued this year as well.
Okay. Any questions?
I just have a comment in relation to what Charlie had pointed out regarding the fourth bus. I don't know if you could just add in parentheses that 3 were purchased the previous year, which is why you have the 4th in there. Because anybody that does not know that we had received 3 previously would question, like Charlie did, what does the 4th really mean? Just a suggestion.
Yeah, that's if you guys want me to make that change, sure. It's yep, we could let me just write a note here. Okay.
Thank you.
I think it does make it clear. Thanks, Joan and Charlie. Any other comments or questions?
Nope.
Well, I would like to say 2 things. One is that once again, Helena has done an amazing job of keeping track of a gazillion different budgets and grants. And we thank you very much, Helena, for your tremendous attention to detail and keeping this on track. And number 2, thank you to Joe for continued excellent management of a very small district, and we're actually doing extremely well. So kudos to both of you. Now we need a motion, I think, Joe, to recommend approval of the audit to the board. Is that correct?
Yes, that's how we usually do it.
Okay. If there are no further questions for Tom, may I have a motion to recommend approval of the 19-20 audit to the Estuary Board of Directors?
So moved.
Second,
Joan.
Second was Peter. Any further discussion? All in favor?
Aye.
Opposed? Abstain? Very good. Motion is passed. Tom, thank you very, very much. I should know this too, but are you planning to be at the board meeting on Friday?
Yeah, if it's up to you guys, if you want me there, I could do like a quick summarized version, or if you don't want me there and you just want to give them the results of our meeting now, it's up to you how you want to handle it.
Okay. How do we normally do this, Joe?
We usually have the auditor there, but we do a very, very quick, go through the
Summarized version.
clean opinion,
Yeah.
no management letter, findings.
Right.
Okay,
and
so
unrestricted net assets. Those are the things that everyone wants to hear. Those pretty much those four things.
Tom, if you're available, that would be helpful, and you just hit the tops of the waves for everybody.
For sure, yeah.
And we
So-
have at the very beginning of the agenda. So
Okay, and that's Friday.
You won't be prisoner.
we'll get you right out.
All right. Get back to time. Great.
Okay, you may, while we'd love to have you stay, you may want to leave the meeting and do other people's things.
Yep. Thank you,
Susan,
everybody.
does that apply to all of us?
Yeah. No, not you, Charlie or Peter. Okay, Tom, thank you.
All right,
We'll
thank
see
you all.
you. We'll see you on Friday.
Friday, take care.
Okay, thanks. All righty.
Um,
Go ahead, Charlie.
I just want to say thank you to Tom for the great job.
Yeah, it was that comparison chart is very helpful. Item number 3, discussion of budget versus actual and cash flow. Helena.
Yes. I need oh, it's budget versus actual. Joe, can you up a little bit? Just a little bit. Yeah, thank you. This is our summary. So as you can see, we with the budget, there's no concern. We can go through each program that we have, but so far we have some extra on Midshore and Riverside, other ones with the budget, and some of them we will use CARE Act, and and then the year when we done with all the stuff, we will know more how much CARE Act we have to use it. So right now we if you can see we only use 19 over there, 19,000 for all this program, core program. So we're doing good, and I'm very, very happy with the budget. I want to concentrate on a few things to show you guys something new we have now. It will be Extra Mile and CARE Act. If Joe can click on those, Extra Mile, yeah. So I want to point it out. So for this fiscal year, we so far $94,000. And if you look at that, to summarize for you, because it's a CARE Act money, it's a lump sum, and I want to show you what we will award it. When you look at bottom there, operation award was $960,000, and we so far we draw $147 from the beginning of last fiscal year and 94. So the remaining balance is $812,000, and that's why for now on I will keep showing you what is, so you guys know where we stand with that. So this is a little different than other one because this is money awarded and we just keep drawing it. It's a federal money. It's a state give us TOD, and each year this one they give us lump sum and we have to manage it. Okay. So this
Helena, that is it correct that the CARES award for Extra Mile is sufficient for roughly 3 years of operations?
Would Joe, you can answer the better, but in my understanding, we draw the money as we go, and it's I don't think it's an expiration date, how you can say on it. So if we go over 3 years, I think it's okay if we manage it and if we, so that's to my understanding. Joe, where's Joe? Can you correct me on that?
Yes, the intent
Mhm.
was to fund through 3 years, but Helena is correct. If we underspend, it doesn't go away, unlike our other normal grants.
Okay,
Where if we're under 1 year, we could be over the next year, or because it's in our CARES grant, if we don't use it all, and we want to use it for another purpose, we could do that as well.
okay. So lots of flexibility there.
It's very flexible. That's why we kind of put it aside here, though, so that we don't. So we know that we're holding this aside,
Mhm.
and we don't think it's part of our larger CARES grant that we could spend for whatever. Because we do have to make this last 3 years, but it's enough
Sure.
that
Okay.
if we keep that at 960, it'll last us 3 years. But we just want to make sure we set it aside so you understand it's not, we don't double, spend it.
Because the grant came in one lump sum, and it's one grant, and it's between Extra Mile and CARE Act. So when you click on the CARE Act, Joe, for me, here's I just give you the summary so you understand. We have Urban Care Act, which comes from federal government, which is operation awarded was $1,540. Withdraw so for $50,000 and obligated. That's mean I have expenses for it, but I haven't drawn yet. But I will draw that. So that's so remaining balance is in March will be 1.422, over $1.4 million. We also have little money came from the ruler, and that comes from DOT, which is they regulate that. So they gave us 30,000 for this fiscal year. So I show you a withdraw 11,000, and a remaining is 1,200. We have some little bit more bills now because we did testing, COVID testing and COVID vaccination. We start receiving those bills, so I will obligate some money there. So we will try to spend all the $30,000 if we can, because all those expenses are eligible for. So that's where we at.
Helena and Joe, could we click on Route 81?
That was my next one.
Oh, I'm sorry. Go ahead.
That's what I wanted. I just yes. The Route 81 is that this is our last year. Actually, it's not this last year. We have a little bit. I think I look it back, and we start in August, mid-August, I think, third week of August, 3 years ago. So it will go all the way to the August. So that will be actually hidden a little bit July and half of August in next fiscal year budget. We can spend it because this one go 3 years term. So we I was monitoring very closely this year because I want to make sure we spend the money we receive, because if we don't underspend it, we have to give it back. So we'll see how. So make sure it's all the stuff we have and the things. So, but yes, that's the one thing that next year we will have it, or we have to get some different type of funding to continue this program.
So the pilot essentially expires in August of 21.
Right.
For Route 81. We should be thinking about how we want to address that, because we had originally approached DOT about extending the pilot for 1 more year because COVID interfered with getting reasonable data on utilization. And they expressed a willingness and then an unwillingness to do that. And I'm not sure where they are at this point, but we shouldn't wait until the summer to come up with an alternate financing plan for this route if we do want to maintain it.
Yes. Well, I have I want to say that, Nan, but as we brought it up, I want to say that was one of my stuff is we have to Joe and I have to work on it and see, because I have to work on the next year budget, and I need to know to work on the budget, see if this program continue, what funding we get. So, so we will work on all this stuff. So that's one of our
Okay.
challenges.
Yeah, Joe, what was the status in your conversations with Dennis Zielinski? Because I know we had it as part of one of our items originally for the memorandum of agreement, that it was an item that we really wanted. And I know there was discussion, and I'm quite honestly, I don't have my notes in front of me, and I don't know what the bottom line was. So is DOT committed or not committed to extending it for another year?
Is that for me or for Susan?
I'll weigh in and then Joe can add anything to it. Dennis initially agreed to that.
Right.
And then in the same meeting, he said no. And then in the same meeting, he said yes. And then in October of last year, he said he wasn't committing to anything until we produced an MOA draft. And there have not been, and to my knowledge, any further discussions about that particular item. So we are in limbo.
I was going to say limbo sounds good.
In past meetings with both Dennis and Rich Andreski, they both expressed support for at least giving additional time. They both said they understand that they can't use the past over. So half of this pilot will have been during COVID, so it won't be a good measure of whether it was a success or not. And they said they understood that and supported extending it. But we've really been focused on getting this MOA done and we wanted to get this closed and done before we started on this, which we're hopefully just about there.
Yeah, but we won't lose sight of that, Joan.
No.
And local governments could be called upon here. But I think our preference is to see if we can get another year of pilot status so that we can establish some reasonable, normal conditions of utilization.
Right.
Going forward. But we will be taking a closer look at it. Okay, Helena?
Yes. Is there any question on the budget versus actual? If not, then we will go to cash flow.
Gone.
Okay. Some technical issue.
Many things open.
I know. I was just when Joe up, and I just will say that I have no concern. We have very good cash flow. There's no problem paying bills. As you can tell, we have good good general fund, and we haven't been borrowing. And with the DOT delay their payments, and they get very picky on everything, how we submit it to them, we can run our district with no problem. We haven't borrowed in the last, like Auditor said, the last 7 years. We haven't borrowed from our line of credit, which is make my and Joe life very easy. Because now dealing with Middletown, we look at that. They have some general fund, but
half our
yes.
life easy.
Excuse me?
Half our life easy.
Yes, because on the other hand, for Joe has to in Middletown, we just gotta tell Joe, you gotta borrow money again. So what we do, we borrow and pay back, borrow and pay back when they receive money. DOT has been delaying for like, so basically we pay in out of the pocket, and then we're supposed to get in advance, we get reimbursed. So that make very, very difficult and stressful. So I'm very thankful for our general fund because it makes our life easy here. Thank you.
Okay, any other questions on the budget or cash flow for Helena?
On the cash flow, Helena,
Yes.
do you have the number, the cash flow number at the beginning of that year, July 1st of 2019, so we can see how we did for the full 12 months of,
Uh, because we didn't do it that like on a monthly, this is kind of estimate for me. I just go in a certain time and certain point. That's why when the auditors on the end of the year, when they do audit and they determine exactly number for us, and they will tell you that's what that and restricted one, it's mostly, it's a cash that we have, that we actually district money. So we can use that to offset our expenses and waiting for DOT reimbursement.
Yeah, July is usually worse anyway because we don't get paid yet.
Yeah.
We
Yeah.
don't, the DOT closes their books right at the end of the year,
Mhm,
and we don't get paid for that first quarter
mhm.
until August
September,
or
probably.
September.
Yeah,
Yeah. So it's really a point in time snapshot,
correct.
but it's not really,
Yes.
it's not like a cash statement. It's a, I'm trying to think, like you saw in the audit where it's a cash based accounting. It's not that. It's really just where the bank is right now, where we predict it's going to be.
Yes, it's
And
just
a lot, almost all of it. The biggest thing variable is how quick DOT is paying and where you are in a quarter, because they front a quarter. But so if you're later in the quarter, you're going to look a lot worse than in the beginning of the quarter. And July is always the worst until we start getting paid by the towns.
Okay, Charlie?
okay, thank you.
All righty. Helena, thank you very much. Next item is discussion of items for April 16th board meeting. Obviously, the audit, and I think we can talk a little bit about not losing track of the status of Route 81. There was an old business item that I forgot to mention earlier, which is we talked a couple of months ago, Joe, about a fare structure for Extra Mile. And we haven't done anything definitive on that. Do you have a sense of when you think you might want to bring something like that to the Finance Committee?
Well, I think that's up to the committee. And now we're looking at the free fares for the summer. So
Mhm.
I don't know if we want to, do we want to start it when we're still doing free fares? We want to wait. That's probably a discussion for the larger group to see how everyone feels about when do we want to start looking at fares.
Okay. How do
Initially,
you-
we were waiting until kind of ridership kind of leveled off. But of course, the pandemic has impacted all that.
Right. Okay. So I guess that's another item like Route 81. We'll kind of keep track of it and then
Yeah,
see.
Well,
the
since
funding
it
we
wa-
got assumes no fare revenue. So that doesn't mean we can't have it, but we
The
have,
CARES funding.
yeah, but
Okay.
we had the funding to cover it without fare revenue.
Oh, that's important. Okay. Charlie?
Yeah, what, the money or the commitment we got from DOT for Extra Mile for, what was it, the 3 years? Was that based upon no fares being imposed, or
Yeah, it covers the full cost.
it covers a full cost? So if we put in a fare, then is it likely that during that time that the payment from DOT would be reduced accordingly?
No, because it's not DOT money. So this was CARES money. And once with anything that we're a direct recipient of federal funds on, once they assign it to us, it's ours. They're out of the picture now. This is all federal money, so they're totally out of the picture. It was assigned to us. We apply for the grant, it's our money. So even if we underspend on this one, I mean, this is very different than any of our normal grants. I mean, I don't think you've ever heard me say this before in an operating grant, but in this one, if we run under budget, it's our money to spend somewhere else. If we charge a fare and now now we have more revenue, well, that's money we could use somewhere else. Or use it to keep, pay for it longer, whatever we decide that we want to do with it, that's our money. And I could repurpose it. So if we were under budget and we said, okay, well, we want to buy a capital item with that money, I could repurpose it and make it capital money. So we have a lot of flexibility because we are a direct recipient of federal funding. Is one of the advantages to becoming urban was it gives us a lot more control over federal funds.
Is there a sentiment on this committee that because CARES money will cover a free extra mile service for 3 years, that we should not impose a fare at this time?
Maybe we want to revisit it in the fall, give the summer, see how ridership is rebounding.
Mhm. I mean, even if we imposed a fare, Joe, we're not talking about a lot of money.
We were talking something in line with our fixed route fares.
No, but I mean, the bottom line is we're not going to get,
revenue.
it's really not a revenue issue as much as it is I don't know, an equity issue that people pay for other routes and services, but for some reason, extra mile is free.
It's like probably about 1,500 a month.
Yeah, I mean, it's really small. Can we agree then that we will revisit this issue sometime in October? Is that acceptable to everyone? That we'll keep it free for the summer?
Makes sense to me.
Yeah, and to give you more experience with extra mile ridership after
Okay,
a period of time. That sounds good to me.
okay,
Yeah,
Joan?
I think we should revisit it also, because there's like a double-edged sword. The longer we go on without charging a fare, and if we want to charge them a fare later on, this length of time is going to come as a shock to the people that are going to be
Correct.
riding it. Unless we put in there a temporary free until COVID is resolved, or some caveat in there, because I could see that from our customers being very upset with us in the future.
Yeah.
So
Everything now does say that it's
Temporary.
it's free during this period. But
and it's free during this period, right?
yes,
The COVID. Okay.
yeah. Well, it started as free during the pilot, and it's kind of still until everyone knows that at some point we plan on implementing a fare. But especially we got free weekends coming up. We've still got COVID going on. I think it's a tough time to start implementing a fare.
Yeah, well, Joan is right, though, no matter what kind of caveats you put in the fine print.
Oh yeah,
Mhm.
yeah.
People
Especially if we went the whole 3-year
yeah.
period, then
Yeah,
it would really be very
Exactly.
yes.
Okay, so we'll agree to revisit that issue in October after we have a little more data on utilization and ridership. Okay, are there any other items anyone would like to suggest we bring up at the board meeting on Friday? Okay, there being none, I think any new business? Also, Peter?
Susan,
Yeah,
Norm has a management technique that I fully endorse. He periodically asked me a question on the phone, but I fooled him the other day and gave him some of the papers that you and Leslie, among others, had used to summarize what's going on. And he called me and he said how interested he was, and was I aware that some of his contacts that he had been familiar with up in Hartford were involved with transportation, so that after the Hartford delegations are sent home, he feels that he may be of some political assistance to us. And I thought that was uplifting, a little
Yes.
scary that now he might look at what I do, but nonetheless, I thought that was very positive for us.
the more people we have in our corner, the better we are.
He has been he's been very interested in this for several years. So we have, and he's on transportation. So we've kind of, known that he's available to us. He sent me messages here and there. So we know he's available to us. So we're just kind of, and others too. And with Joan's help, we've been kind of just trying to think how we strategically use their
Exactly.
interest. Because
There's quite a bit of support.
Yes, there is. And so from various sides and in different aspects of it. So I think there's no doubt we have tremendous political support amongst our legislators that we just have to make sure we use effectively.
And at the right
And
time.
Joan's really good at that, at strategizing that.
Joan's got her foot on that stop pedal. And we can't do anything until we talk to Joan about it. But right now, things are going reasonably well. So your comments are appreciated, Peter. Thank you. There being no other business, may I have a motion to adjourn the meeting at 10:39?
So moved.
So moved by Joan, second by Charlie. Thank you all. The meeting is adjourned. We will see you for what promises to be a very important group of issues coming up at the Friday meeting. So I hope everybody's planning to be there.
Just a comment. I just want to say, I thought this was a good meeting. I thought that Tom had laid out the audit rather efficiently.
Yes.
And so all in all, I thought this was a great meeting, not only our regular meeting, but also with the audit.
Oh, well, that's good. And thank you. I think he did a good
And-
job. And if you could talk to Tom, Joe, and tell him how much we appreciated it and ask him to truncate it by another 3/4.
Oh yeah,
For the
hopefully it
meeting
was
on
clear
Friday.
that we just usually hit those 4 things that I said earlier.
That's
That's what
perfect.
everyone wants to hear.
Charles, I want to commend you because I was running a little late behind you, like about 1/4 mile. But I thought some of the questions you were raising were very interesting. It took me about 5 minutes to understand what you wanted, and then another 5 minutes to understand the answer. But I'm most appreciative for it. I thought this was a wonderful meeting, and
Well,
I
Peter,
enjoyed
I
it.
think I gotta simplify my questions and my points because
No, they were great.
No,
They were
government accounting is so different than private sector. So,
It
Right,
is.
it is. It's
It is.
definitely
so for those
different.
of you
Yep.
coming from the private sector, it is definitely very different. And so you should definitely ask those questions and learn.
Absolutely. All right, everyone. Thank you. We'll see you Friday.
Thank you.
Bye-bye.
that's all.
Joe, are we staying on for
Uh,
even?
we got
Or-
the other. We got to get on the
I'll-
other one.
I'll leave the meeting
And
and then
I'm
get,
gonna text them that we're getting on.
okay, thank you. Bye
Thanks.
all.
Bye.
Bye-bye.
Bye-bye.